Welcome to Cashflow Savannah. Today we have Kyle Buchamp. He's active military. He's stationed right here at Hunter Airfield. I love featuring local real estate investors on this show. What do you think? Is he a great guest or what?
Yeah, he definitely knows his stuff. He's seems like a buy the textbook guy. He's kind of the one that just knows the textbook from the front to back. So yeah, it's really good talking to him. I honestly I didn't know anything too much about all this, so it's just good to sit back and listen.
Yeah, Kyle's incredible. He's taught me a lot. I've really enjoyed working with him. I got to know him because I was his real estate agent and I only work with investors. And so when he called me up, I was like, wow. So he pushed me. It was tough being Kyle's agent because he is so smart. He is so thorough. He has a lot of experience and he took me in a direction that I wasn't at the time overly educated in, which is VA loans. Okay. I had done tons of investment properties, but he was throwing VA loan assumptions at me. And I was like, hold up, wait a second, what? Like I just had to take it kind of slow. He was so far ahead of me as a client. And that was tough for me. I was a little ashamed, to be honest. I was like, I want to do a good job for Kyle. But as soon as I caught up to him and I found that I had a lot to add to the equation as well, it was a blast. And now, we're working together. So anyway, I hope no matter where you're at with your investing journey, you're going to learn something here. Kyle is extremely smart. He's very seasoned. He looks at the math very tightly and quite frankly, he makes sure that he's going to make money with the real estate. And that's a challenge in any market. And he's managed to do that, even purchasing in 2025, he has, that'll cash flow. So it's really been a pleasure getting to know Kyle.
Yeah, absolutely. It's, happy he's an Asian as well. So
Yes,
yeah, if you need some
absolutely.
help on that kind of things, he's definitely the guy to go to.
He is. Without further ado, we're going to bring in Kyle Buchamp. All right. Welcome to Cashflow Savannah. Kyle, how are you today? We're so honored to have you.
I'm good. I appreciate you bringing me on.
Absolutely.
Yeah.
So Kyle, we're going to jump right into this. I kind of just want to get to know you. We just met over Zoom, so tell us a little bit about yourself.
Sure. Yeah. So I guess I kind of grew up Buffalo, New York, I'd call home. My parents were both in the Navy, so I was born in Florida and moved around a little before that. Ended up, they got out of the Navy, went to New York, spent about 11 years there. I joined the Army straight out of high school. Went to the Army Reserves initially, about 11 months in the reserves and transitioned to active duty. So I was a radar mechanic early on for about 10 years. And then picked up, green to gold, went to ROTC and commissioned as a medevac pilot, which is what I currently do since 2019. So about 6 years now, been flying. And kind of picked up the real estate thing back in 2010. We bought our first house, and it's been great. So yeah, married, got three kids and a dog, and just living the life.
Awesome. And you're currently stationed here at Hunter Army Airfield, and you just got here, what, January?
Yeah, we got here December 23rd.
Right.
So yeah, it was kind of a last minute shift. We were supposed to go to Korea, didn't end up working out. Came to Savannah instead, and it's been great. We love it so far.
Awesome. And we love featuring local real estate investors on this show. That's the whole purpose is get to know, the guys working down the street from you. And that's awesome. We welcome you to Savannah. I got to know Kyle in a unique way because you contacted me to be your real estate agent. And I'll never forget you saying, yeah, I'm trying to buy a house for me and my family. And I said, what? Why are you calling me? Like, I feel like there are other agents, that really do that because I really don't work with people buying a home for themselves. And I was so fascinated to hear your story. It turns out I did want to work with you as a client. So, talk about your real estate journey, Kyle. You're quite exceptional, what you've managed to do. So, just educate us a little bit on your background. How did you even realize you could turn your house into a rental? What made you think that was a good idea? Because most people don't even think about that.
Yeah, so I mean, we weren't initially thinking about it. We kind of stumbled on it on accident. Yeah, so like I said, I deployed 2009 to 2010. I was in Iraq, and then came back, and 4 months later, I was married, and we closed on our first house in 2010. Like 3 days after the wedding, we closed. Lived and most of the people who were in my unit, the army was different back then. People would stay in the same place for 15 years.
Wow.
It's basically back-to-back deployments. You go for a year to the Middle East, come back for a year, you get fenced in and locked in that unit, go again for another, and people would just stay there. So we're like, man, we're staying in Fort Hood, Texas forever. We're never leaving. So we bought that house. thinking we were going to stay there forever. Well, come late 2012, I promoted out of the position I was in, and Human Resources Command called me like, "Hey, you got to move," and I was like, "Oh no!" So
Ugh.
we had only been in the house a couple of years at that point, and the market wasn't the greatest in that area. So we were below 4% interest at the time. And, we thought that you were supposed to pay down real estate. You weren't supposed to keep the debt. So we had taken deployment money. We put like $20,000 on the principal, which as a private in the military is a lot of money, is
Yeah.
that deployment money. So we paid down the house a little bit, which actually ended up helping us. When we went to move, we were going to lose a lot of that equity if we sold the house. So we talked to some people. We ended up renting it out. So we did before we left, we did it was a VA loan and we did a interest rate reduction refinance loan on it to drop the monthly payment. So when we left, the monthly payment was just over $500 a month on is a $97,000 house. We
Wow.
refinanced, I think, 77 on it, and so the payment was like about 500. I think it was 512. I want to say,
Okay, I
and
gotta
we
tell
were
you,
able to rent.
for the listener, Kyle is very good at math. I'm pretty sure Kyle does the math on everything he's calculating at all times. Be aware. But I have never heard of this interest reducing refi, and you can do it through this is super interesting. Because so can you tell us what your payment was and how much it was down to when you left? I'm very curious about this.
Yeah, so I want to say it went from like a 650 to a 512 payment. So the VA interest rate reduction refinance loan allows you, if the interest rates in the market have dropped by a certain amount, and I don't know what the cutoff is, but I want to say like, let's say over 1% drop in interest rate, then they'll allow you to reduce your interest rate and recast your loan at that interest rate. But there's a few limitations, and this is a long time ago, so this program may have changed as well. I haven't really kept up with it, but they will reduce your interest rate based on that current principal balance as well. And as long as your payment goes down, they'll let you do it. You can't pull any cash out.
Okay.
So that is one rule on it.
But was there a
But
fee?
yeah,
Did they charge you to do that?
I think there was a very small fee. It was like 13 years ago. I don't remember the exact amount, but we knew that we had to get the balance or get the payment down in order to not have to come out of pocket,
Right.
basically to have it rented out. So we took advantage, and I think it initially rented for $750. And I didn't know anything about running numbers at that point or how to manage real estate. So we hired a company to do it, to property manage it, and we moved to Oklahoma. When we got to Oklahoma, we were like, man, we cannot buy another house. This is a bad idea. Like we're stuck with this thing now. We thought we were in the worst situation ever. And we ended up living in post housing for the first year there. And stupid me, when I got to Fort Sill, Oklahoma, I was like, man, a lot of the guys that are here were here when they were it's where the schoolhouse is for radar repairs. So a lot of the people that were there when I went through school 5 years prior. And I was like, man, no one ever leaves here. We're going to be here forever. Just like Fort Hood. Uh, and
Famous.
I talked to, a couple of the guys I worked with were real estate investors, and they were buying up a lot in that area. And I was telling them about this property I had, 750. The lease renewal, it went up to 800. Our mortgage payment was the same. And I was like, this maybe there's something to this. They introduced me to their agent that was a big investor in the area. And I ended up having her help me find another house. So we were on post for a year, bought another house in Fort Sill on another VA loan. And this is now 2014, 2015, we closed on that house. It was late 2014, we got it under contract, closed it on it early 2015. Did another renewal on the house in Texas, and rent went up from 800 to maybe 825. And I was like, man, my mortgage payment's staying the same, and this keeps creeping up. Like, this is pretty cool. We've always been big savers. We kept putting back more and more money. And we were like, maybe we should try this. So in 2017, we bought our first investment property. It was a FHA foreclosure. So for the listeners, if you don't know, FHA foreclosures get listed on HUD Home Store. They get auctioned off basically. It's different than buying a house from a person with emotional attachment. You're bidding against, computer algorithm. And every say 30 days, they'll drop the price on what they're asking. They'll also increase the spread on the percentage of the property of that ask that they're willing to accept in an offer. Right? We kept offering on it week after week. It was really just the same property we were offering on, and they were asking 82,000 for it. And we were like, we'll give you 37,000. And they were like,
Wow.
no, they wouldn't take it, wouldn't take it, wouldn't take it. And we just kept bidding. I think we started at like 34 and slowly went up.
You had
And
cash for this, Kyle? You had saved up cash,
yes.
and that's probably
Yes.
why
So
you're
we had,
okay. As an army,
yeah,
what rank were you at this point? Not a private,
so
maybe.
at this point I was a staff sergeant in
You're
E6.
amazing.
Here's the thing though. So I joined the army at a really good, a lot of my stuff was very lucky on timeline. So I joined the reserves in 2006 and I went active in 2007. And during that time, the Army was surging into the Middle East and there was a lot of sign up bonuses. So when I joined the reserves, I got a $20,000 sign on bonus.
Wow.
So you get half of that after training. So I got, 10,000, which after taxes was like 7,200. They took like 28% off the top. So I got like 7,200 and then went active duty. And when I went active duty, I kind of did the same thing. I knew some guys that joined the army, a year, 2 years before me out of high school. And they were like, don't go infantry. It's a terrible life and you don't get paid more. So I kind of took their advice. I did the ASVAB, the Armed Services Vocational Aptitude Battery, to see what jobs you qualify for. And basically went to the recruiter and I was like, listen, I don't show me what I qualify for. Now take out all the infantry. I'm not doing that crap. Now tell me what job, I don't care what I do. Tell me what job has the biggest signing bonus. That's how I picked my job.
See, I said it.
Um,
He's good at math. I said it.
yeah. So in the reserves, I was for $20,000, like, hey man, you could be a 42 Alpha. That's a human resources specialist, work in HR. Terrible job. Never actually did it. I went to school for it, never actually did the job because the reserves doesn't do anything, which is why I went active duty. I went to two drills and sat in a classroom in the snow. It
But you
was
got the bonus, right?
so I got half the bonus after training,
Okay.
7,200. I went active duty and did the same thing because they were like, hey, you can't be a 42 Alpha on active duty. Like, we don't need those. So you have to switch your job. So you have to go back to school. So I was like, okay, I don't want to be infantry or anything. What has the biggest sign on bonus besides that? And
I
I
love it.
became a 94 Micah radar mechanic. And the sign on bonus for that for a 5 year contract was $40,000.
Okay.
$40,000. So here I am, 19 years old at this time. I'm like 40 grand, I will take it. So I signed up for it. After almost a year of training for that job in Fort Sill, Oklahoma, I went to the unit. There was issues with my bonus paperwork because you're only supposed to get one initial entry bonus, and I had already got one, and they signed me up for a second one. So I had to go through this huge process. They were basically like, "Hey, you got to give us back that $7,800 if you want this 40,000." And I was like, seriously? So, anyways, I fought it and ended up getting the debt waived for the reserve bonus. Like I had to write letters to all types of important people and get my boss to sign a memo, and I fought the debt and I got debt forgiveness on it. So I kept the 7,800, and then because of the bonus paperwork issue, I didn't receive the bonus, the first portion of the bonus, until I was deployed. And how it's supposed to be is you receive on a $40,000 bonus on a 5 year contract, you would receive 10,000 after training. You have 4 years left on your contract. You get $7,500 a year after that, right? That's how they break down the bonus. So because of the issue, I didn't get the initial portion of the bonus until like really late in my deployment. And when you're deployed, it's tax free. So
Nice.
I ended up getting $10,000 on my check. And then the next month, I got $7,500 on my check because it was a year back. Right before I redeployed, I got another 7,500. So that was, $25,000. Plus, I didn't do anything when I was deployed, back to back deployments, because I deployed again 2011 to 2012. So I basically, went to work, went to the defect, went to the gym, went to sleep. And that was what I did for 2 years in Iraq. We had put back quite a bit of money compared to how much we were making.
And this
Anyways, yeah, go ahead.
That's so atypical, Kyle. My husband deals a lot with different military, and he said the wives are just spending money when the guys are gone. I hear that all the time, and it's amazing, how you guys were able to save because it's easy to just be like, let's just buy it, let's get a car, let's get a grill, or that's amazing.
Yeah, no, I bought cars are the worst. Cars are the worst for soldiers. Soldiers are buying, 19% interest rate, brand new Dodge Challenger or whatever. It's like, or a huge pickup truck and they're not hauling anything. I my car at Fort Hood was a 1995 Ford Escort that was $1,000 that I drove until I promoted to staff sergeant and went to Oklahoma. And when I sold it, I got $1,000 for it because the depreciation had capped out on it. So I basically, I mean, I had put some tires on it, oil changes, you know. I basically had that car for free for almost 5 years. Um, yeah. So I used to get a lot of crap about it at the unit, you know, why are you so cheap type stuff. I'm okay with it. Yeah. So and I'm very fortunate to have my wife Haley who
Yes.
does not spend money like that and who has always found some type of work to do along the way during our now 18 years in. Very fortunate. So skipping
So,
forward to what we were talking about, I bought this property off HUD Home Store.
With
So
amazing.
yes, yeah. So we ended up, they actually called me, which I didn't even think was supposed to happen. So a representative from HUD Home Store called me and was like, listen, I know you're bidding $37,000 on this thing every week. Uh, we can't take less than 51,000. And they had it listed for like 75 at this time. Like, we can't take less than that, you know? I could do 37,000. And she was like, she was like, no, I'm sorry. So I was like, okay, well, give me a call when you can take that because that's what I've got. Um,
hmm,
and a few days later, she called me back and she's like, hey, you still willing to offer that 37? And I was like, absolutely. And she took it over the phone.
No way.
Um, so it's kind of well under market on that. So yeah, we got it for 37,000 and we put, I think it was about 12,000 into it. Um, with me and Haley, doing all of the work.
Hmm.
We had no idea what we were doing. Um, but YouTube had some ideas. So we were on there and we were putting up like some drywall, we were putting down some floors, we were repairing stuff and just no clue what we were doing. We ended up, again, I said, you know, we were supposed to be there forever. Well, I got picked up for green to gold out of there. So we were about to move again. So I could go to college for 2 years and commission. And we didn't quite get the repairs done. And we had to hire out like the last $2,500 for finishing touches on, you know, mud and some paint and a couple pieces of siding that we didn't get to. Um, so yeah, we hired that out. We ended up moving. All in, we were about 51,000 all in on it after
Amazing.
fees and everything. Um, and we rented it out. Um, went ahead and moved to Kansas. And if anyone's ever heard of it, this is the Burr method, is what I'm describing here. So uh, we rehabbed it, rented it out, and waited 6 months for seasoning with the bank, and ended up, you know, we called the bank, said, "Hey, we've got a cash flowing property. It's paid off. Like to pull some cash out of it." So they go out, they do an appraisal. I think it appraised for like 88,000 at the time. So we're 51,000 all in. It appraises for 88. So we've just generated, you know, $37,000
Yeah.
in value right there. And on a single family, banks at the time, you know, 80% on a single family, um, or 75% on a single family and 70% on a multifamily is what you can pull out. So we pulled out 66,000 on it. It's still cash flowing, and you know, we essentially got paid $15,000 to get a cash flowing house. So it
That's
really set us off.
it's a fun deal right
Yeah.
there. 37. What's it worth today? Do you know?
So I would put that one. I've got it, my like spreadsheet right here. I put that one at about 103,000. So
Okay.
that market does not appreciate significantly. Fort Sill, Oklahoma, Lawton is the city. It's pretty stagnant on appreciation. It has gone up some, uh, but it cash flows well in that market. You
right.
got a lot of houses you can get for, you know, $60,000 that are renting for, you know, 900, $1,000. So the cash flow is good, and those properties do really good on our taxes at the end of the year
Right.
and kind of balancing this out.
Well, and for a
So,
listener, I've been investing in Savannah for a long time, and Savannah didn't used to be an appreciation play. Like for years, everything in Savannah rented for $650. The rent didn't go up, prices didn't go up, but it would stuff would cash flow. So yeah, you can either cash flow or you can have appreciation. It's hard to find both, but it's possible. But I wouldn't stress about that at all. If you're getting solid cash flow on a property and you have a great entry point, like, that it's always nice to know the appreciation, but killer. Wow, that's great. So that's how you got your first four properties, just grinding it out and saving.
yeah, yeah. I mean, we're at three at this point. So this is our first. We had the one in Texas we bought with the VA loan. The
That's right.
second one in Oklahoma we bought the VA loan. So this is the first actual investment property we bought, and that was we closed on that in May of 2017. Um, and it kind of from there, every 6 months basically we were able to do it again. Is 6 months is about as quick as you can do it, unless you have the cash to kind of run two funnels at a time and do two deals at a time. But we just weren't there at that point. So uh, yeah, we went to Kansas and basically did it again a couple more times in Kansas while we were there for 2 years. And we were doing, online auctions. So every week I was looking on, the auction.com, zone.com, Hudson and Marshall, Hubzoo, there's 1,000 different sites you can do online auctions for foreclosures. And we just started digging into that. So,
The auctions is how you get your deal flow most of the time.
I mean, so it's really how we got started. For our next three, we're all on auctions. So the first one in Kansas, was the same kind of, cheap property. We bought it for 57,000 and put about 30 into it. So we were, 87,000 all in, and that one appraised for 135 at the end.
Wow.
Um, and we were able to pull out 101,000 on it. So we got paid another, 14,000 for that. And this, again, I talk about, luck with timing and everything. This is interest rates were extremely low. Money was easy to get. I think nowadays you try to do stuff like that. You might not get paid $15,000 to get the house, but you can get all your cash back out of a deal, and you can re-roll it. So interest rates are higher, so those numbers are a little tighter. But you can definitely still do this.
Well,
So,
with every house you bought, you ended up with more cash, right? You got your money back
yes.
plus some. And I've been through the same thing. It's like the first one you buy is so hard. I have a client right now just struggling to get that first rental. And I keep saying, get the first one out of the way, get the second, the third. By the time you hit four and five, it's so much easier. But it's hard to get that momentum going.
Oh, definitely, definitely. But it happens. I'm not gonna say it's a quick play because it does take, a few years, but I think the Burr method is still alive. I think you can do it, and it is probably for a normal W-2 person that's not, doesn't come from money, doesn't have a multi-million-dollar business to back up their investing. The Burr strategy is the absolute best way to get to your first 10, I'd call it. Because after 10, you're limited on conventional financing. Money's going to be a lot more expensive at that point.
Did you guys
Yeah.
do all the work yourselves, those first 10?
No, absolutely not. So we did that first one we bought, we did 90% of the work. The second one we bought, we did probably 60% of the work, a big portion of that. So we put, 30,000 into it. Over 10,000 of that was HVAC, because there's a big cast iron boiler and baseboard heaters in there. The house from 1960, and we ripped all that stuff out. So we did the labor of removal because that was going to cost us a couple grand just for them to take that stuff out. So I was going to college there. I grabbed a couple guys from the wrestling team, and we went in the basement and pulled that 600-pound boiler out. It was very difficult to get out. Removed all the copper piping from the baseboard heating. So we were like cutting up holes in the ceiling and getting all that stuff out of there, and did a brand new HVAC install that was, I think, it cost us like 11 grand to have someone come in and do that. So we did not do the HVAC. I don't think YouTube was going to get us there.
No.
So
So I
yeah,
want
but
to people are like struggling nowadays, which I understand why they struggle with the Burr method. How are you making the method work today, especially in this market?
um, yeah, so we are to advance forward to today, we are not right now buying. We are 4 years, I'm 4 years from getting out of the military, retiring. Um, and we are actually paying some stuff down that's higher. I call it higher interest rates, but we're paying down stuff that's like 5.75%, 5.5% on some of our debt, with a goal of in 4 years, basically I'll retire and my salary will not change just based on removing the principal and interest payments by paying off this debt. Initially, when I had, 4 properties, I was like, I'm going to get 100 doors. It's going to be awesome. And as we get closer to retirement, and I realize we don't need 100 doors. We could have 15. We're currently at 16. We could have 15 to 20 door range and be comfortable and not have to expand to that point. Everyone's different. Some people want to say I have 100 doors. I don't care. So we are not currently doing it, but I do enjoy looking looking at properties and researching it, and I know that the deals are still out there at the higher interest rates. So you do need more conservative numbers if you are going to be doing it today.
When Kyle, it's funny because I've been investing for many years as well, and I hit the same thing. I thought I was going to have 200 doors, and then I've also stopped buying. I'm just like, I'm good. I don't need more. I just want what I have to be in really great shape. So I'd rather put my cash into rehabs now because I look at everything the same way as you, where I'm going to keep it forever, and I want to retire on that income. So it's funny. I think a lot of people get in the same way, like, I need 400 of these or 2,000 or whatever, but really you don't. I mean, you start to look around and go, this is great. I don't need to complicate my life any further. But 16 properties and you've been in the army since you were 19. Like, I just want to highlight that for our listener because it's easy for people to say, oh, I can't do it because of X. I can't do it because of Y. You have figured it out and you've definitely sacrificed in your family, but not really. You still have a great lifestyle. I've seen your home. It's great. You have a great home. Like, you're not really sacrificing anything, but in the early days, you had to sacrifice a lot. What was the toughest thing that you and Haley went through to in order to save that money, in order to have it for real estate? Talk about the sacrifices just a little bit, because I know you put a lot of work in. That's hard as well. But what kind of things did you say no to?
Not really that much, honestly. We were still doing things. We were, in 2012, we took our son to Disney World, and we've been to Disney World a couple times, Disneyland. We still travel, do the things, but we're not flying to these places. We get in our minivan. We go to visit family in New York. We would drive 24 hours from Texas to New York to visit them because airline tickets are expensive.
Wow.
Uh, so things like that to save money. We really don't go out to eat a lot, or we didn't. We kind of picked that up a little bit now. We're definitely a little more free with the money now that salaries have gone way up beyond when I was a private. But in the beginning, we weren't eating out. We weren't doing things. We were, staying home and playing board games or,
That's all right.
whatever it is. And then, like I said, the biggest thing is cars. We never had nice cars. I actually just a little over a year ago bought the first new car I've ever had. But even that wasn't anything extravagant. It's a, Toyota Corolla hybrid that I paid $22,000 for that gets 53 miles to the gallon.
Good.
It's nothing crazy, but it is the first new car I've ever owned. Um, it hasn't been a lot of sacrifice though. I don't feel like I feel like it's pretty normal. But I look around and see the other people driving, huge trucks, and I'm like, oh,
Yeah.
what's that? 6 miles to the gallon, and you paid 70 grand for it? Dang.
Said they have a big truck, but they don't ever tow anything. That was hilarious.
That's 90% of the people in the military driving big trucks don't need it at all.
Yeah.
Um,
Well, it sounds like you value like your kind of freedom over the extravagant, like materialistic things, which I think some people want super nice things and some people want freedom. I lean towards the freedom side. I think we both do in this call. So I think some people see what they're seeing on social media and they think 1,000 units and all this extravagant stuff. But man, I tell you what, when you don't have to work for somebody or go to work and you get to chill and drive your Toyota Corolla around, some people might want that eventually.
yeah.
So,
The gurus with the Lambos just make me crazy. And I'm like, not a real estate. Like, I know people with some sick amounts of real estate. In fact, one of my friends has hundreds, arguably hundreds of millions in real estate under management, and that she's partial owner of, and she drives the most horrible minivan you've ever seen. I've been in it. It's terrible. It barely has seatbelts. And like she'll take her kids to the mall or whatever. She'll just leave the keys in the floorboard and pray someone steals it. They never do, but she's it's just incredible how people that really have wealth and have a lot of real estate, they tend to not really care. So that's really great. Well, Kyle, so you've shifted your strategy a little bit just because I got to help you buy the 16th property. So one thing that you're really good at, which is what I really want to focus on today as well, is that you've really learned, you like you said, you're past where you could get 10 conventional loans anyway. And I didn't get to ask you, I guess this is a basic side question, but do you have some in your name and some in Haley's name, or are all of yours in both names, or how did you structure that? Because I have heard of people doing 10 in one spouse and 10 in the other. Did you come up against that at all, or what did you do with the
I
loans?
mean, all of the financing is in my name.
Okay.
Um, Haley is on all the, the titles and everything.
Okay.
She's on the deeds, but I'm on all the financing. So a lot of it's conventional, and then we had um, one deal, we bought from a retiring investor. We bought four houses in a fourplex at once,
Nice.
and that was a commercial loan we put on that.
Great.
Um, and then we were able to work out a deal where we ended up selling the fourplex, and by selling the fourplex and keeping the same loan, the bank approved it. We had enough equity in it
Wow.
that we were able to pull all of our cash out of that one too. So we basically got the four houses for free.
Good gravy.
Um,
I feel
yeah,
like we just
yeah, it
pissed off
was.
all of our listeners. Like they just turned off the whole podcast when you said that. But people do that. Like real estate is awesome. But so arguably I just want to keep on the conventional thing for one more minute. Arguably, if they're all in your name, the conventional loans, okay, the commercial doesn't matter. Arguably, you could get Haley on 10 more if you wanted to go the conventional route. You could say, here's her income. She's going to get the loan. Obviously, put both of you on the deed. You're married. It doesn't matter. But I have known people that could do that. So you could,
Yeah,
continue. You have chosen not to necessarily, but I just want to say that for education purposes, the lender is your partner in this. And so there are different ways to work out the lending. And Kyle's definitely figured out a lot of them. But with him being the only one on those conventional loans, Haley she still has capability. My husband and I also maxed out, and we just got so sick of kind of conventional financing. The more real estate you have, it just is a nightmare to do the paperwork. So we don't do it anymore.
yes.
I mean, you're at that level as well. But legally, could you? Yes. Will you? Probably not. So I just want to point that out. Well,
Yeah, it's definitely a lot on the piss,
yeah.
especially this one we're currently in that you helped with on the, assuming a VA loan. It was rough on the paperwork. I think I want to say there was like 98 documents I had to upload in the first week
Wow.
just from it was ridiculous. They want, insurance statement and tax statements and tax returns and, just everything. It was a lot. And then I had to write letters explaining
Right.
different houses I had, and it was a lot of paperwork, but
But worth it.
worth it. Worth it definitely to get we got a 3.125 interest rate on this house, in 2025.
Yes, you did.
So definitely worth it to do that paperwork.
Well, and that brings us into your here and now, which I want the listener to understand. What Kyle is incredible at is investing using his VA benefits. Okay. And if anyone listening has VA benefits and you're even slightly interested in investing in Savannah, you need Kyle in your corner. He is incredible. And so when he called me back in the last winter and said, I need to buy a house, it will eventually be an investment property. You were coming at it from math, which I highly recommend. Kyle was going to move into the home, but he wanted to know that the payment was low enough. And of course, he had this interest rate goal, which is we met. And he said, it's got to be low enough of a payment that I could move out next week and it would cash flow. And so, more than the home, we found Kyle a loan that he could assume because he had VA eligibility left. And I'm going to say it wrong, Kyle. You have to correct me. But Kyle not only is great at buying houses with VA loans, he's really great at assuming VA loans and taking over the mortgage while buying the house. And this is a completely legal transaction. With him having VA benefits, he assumed he took on the loan, legally transferred it to his name, and the seller is not obligated at all. So talk a little about investing with using VA loans. Okay, you can do it from the get-go or you can assume them. So go over that for us for a little bit, Kyle.
Yeah, so I think most veterans know that they have a VA loan eligibility, right? And you can, a lot of people think, I can use it once, or there's a lot of different things people say. So you have, and first off, so VA loan currently, if it's your first time use, you've never used it, there's no loan limit on it anymore. So it used to be the conforming county loan limits. Um, that no longer exists. So the jumbo loan is kind of gone. As long as you qualify to make the payment and you intend to live in it as your primary residence for a year, there's no limit on your first use. And then your second use, third use, which I currently have three VA loans out, is second tier entitlement, and that's going to be limited to county loan limits. So, for example, here it's $806,500 on a single family, and then that goes up as you increase the number of units up to 4 units, because a quadplex is still a residential property. Anything beyond that's going to be in the commercial space.
Mhm.
So uh, you can continue to use that. And then what the VA assumption allows you to do is take over someone's VA loan. All VA loans, all FHA loans as well, are also assumable. Um, the VA's released a couple lender letters and or VA circulars in the past couple of years to clarify a lot of the guidance on that. Um, Basically, the first one was basically saying, "Hey, banks, you will allow this. Um, you can't not allow someone to assume it if they qualify based on underwriting." There was a circular that came out that was basically like, banks cannot add overlays or additional requirements for someone to assume a loan. There was the most recent circular that came out. The VA told banks that they will allow secondary financing on VA loans. The problem with that one is the product doesn't really exist right now,
Right.
um,
We're
at
working.
a large scale at least. So we're working that issue. Um, but yeah, so if you look at a house that has a VA loan and it's at, you know, 3% or under 3.5, 2.5, 2.25% interest rate, there's a lot of value in that in your monthly payments. One of the main issues with it is most of those houses that are at that interest rate were purchased a few years ago, and appreciation has hit those properties on a scale, never seen before. Since 2020, 2022 timeframe till now, houses have increased in value by, up to 40% sometimes. Um, and that gap has to be covered either by that secondary financing or by a cash position in order for you to assume the loan. So if you have the cash to cover that, you will save yourself a lot in the long run on your mortgage payments.
Right. Well, for the listener, Kyle educated me, and we were both kind of going back, but we got better and better as we looked. Okay. He said, I'm coming. I do have some cash. I'm not going to say what you had because that's your private business, but thank God Kyle had a little bit of cash. Okay. If he had no cash, it would have been a much harder position. But he said, I do have some cash because he had been saving. And when I really examined the VA paperwork as an agent, I never realized this before, but there's a VA loan assumption on there. And we could have even bid, I'm going to make a number up. Okay. This is not the true number, but I'm going to say 20,000 just to be simple. Okay. I could have put on that form, Kyle has 20,000 in cash and he will pay only 20,000 in cash, plus he will assume your loan. So as the buyer, if you have that VA eligibility or even not, sometimes they don't care if the VA eligibility stays on them. They sometimes don't care. But we found as we were looking, Kyle wanted a very specific APR under what, 3.5, you said was your
Three and a half was my limit. I'm not paying more than that,
no, it's not. We shopped houses based on the APR. We wanted a lot of time left on the loan, low loan payment. There was this whole calculation into it. So we narrowed it down to 5 properties in Richmond Hill. Okay, Richmond Hill is a great market. He had 3 children. They were going to go to school. They wanted, this and that. Of course, we were looking in Savannah too. But we identified 5 sellers, and at the time it was winter. Okay, it was hard to sell a house. The market's been kind of sluggish anyway. People were begging for Kyle to offer on their property, and I told him get go. Before we even looked at the house, I was calling agents. I was like, "Hey, I need the APR on your client's loan." Okay, I had to ask for all this personal information. What's the payoff? What's the payment? What's the APR? And we made spreadsheets. And it was so funny because we were really shopping without even walking in the houses. We entered the homes much later, and he was going to live there with his family. Normally, you would think a normal buyer would be like, I have to check the neighborhood. Kyle was like, I don't give a flip. It's about the numbers, it's about the math. And it was quite the journey. And so we were able to find a seller that could work with his cash. And we got quite a bit off of the price. I mean, we got a really nice discount. We got a 3.1 APR with 28 years left on the loan. Okay, and it worked for your cash. It was so exciting to take down that deal. I have to say, when we finally got it under contract, that was fantastic. They were begging us to take their houses. It was awesome.
Yeah, it was great. There was definitely more in the market than I was thinking there would be that met the interest rate requirement and the cash requirement that, qualify based on our numbers. So that was good to see. And then you brought up some great points that you can just do, hey, I'll assume it, and then at closing, I'll cut you a $10,000 check. It doesn't, you can offer like that on an assumption. And then another great point is you don't have to have VA entitlement to do this.
Right.
Uh, you can, you could have never been in the military and assume a VA loan. Um, Now that's, if you do that, the loan does stay on the certificate of the seller, and they have to sign an agreement saying that they're aware of that. So it can be much harder to do because they don't get their entitlement back. Um, you'd have to convince them, but that can be a great option as well. And my understanding is if you assume and do not transfer entitlement, I don't believe there's an owner occupancy requirement on that as well. So,
I think there is actually. I've seen them
okay.
selling them that way, and they always say the stipulation is that they have to move in or say they're going to. But a lot of people, like you had said, Kyle, maybe Mr. Joe Army guy moves from Savannah to Texas, and they've already bought a second home with their VA eligibility, and they
Mhm.
they may want to be done with it so badly that they don't care that the loan that their entitlement is gone. But I just want to make a clarifying point. It goes into your name. Like if I've never been military. If I buy your house now and I don't have VA eligibility, the loan will be in my name.
Yes.
Just that let's say $300,000 is still on your eligibility. That's the only negative thing to the seller. They're not on the hook for the loan anymore, but it does
Yep.
affect how much they can borrow with another VA loan. Did I say that right, Kyle?
Yes, correct. Yeah. I would completely be on the mortgage. The mortgage is in my name. They no longer have access to a loan at all. Uh, the deed is in my name.
Right.
Everything is in my name. It's just on their VA certificate of eligibility until that loan is paid off. Which doesn't, if it's a $300,000 house, they still have 500,000 in eligibility. They can go buy another house on a VA loan potentially. So it doesn't limit them from buying another. Just good to know for a seller that's selling to someone who doesn't have entitlement to take over. So
Cool. So what are the numbers like that? What's the rent numbers like that? I want to hear some of the numbers with this house that you just got.
I'm ready.
so if I were to rent it out, um, we'd be looking at about the $2,800 range, and the mortgage is currently $2,000 with everything. So um, typically, as you go up in value in property, um, the rent doesn't tend to keep up with that. So, if you've heard of the 1% rule, you buy a $60,000 house and rent it for 600 bucks. Well, if you buy a $600,000 house, it's not necessarily going to rent for $6,000, right? So it doesn't typically keep up as values go up. But I would be very happy to get $2,800 in rent on a $2,000 mortgage.
Yeah.
Plus, you're getting, as that value goes up, you are getting more principal pay down faster. And we're already 2 years into the amortization, so it's already starting to tilt a little more in our favor. If you ever looked at an amortization schedule, it's
Crazy.
not pretty in the first couple months. It's like 98% interest. It's ridiculous. Um, yeah. So being further into that schedule is definitely a nice thing.
Cool. And Richmond Hill is a great market, especially I feel like you can kind of get both in that market, like cash flow and appreciation. I know everything's appreciating like crazy. So
Yeah, yeah, it's going to be good. I mean, this is another one we're gonna hold forever. Um, eventually we'll die, and it'll pass to our heirs, and they'll get a stepped up tax basis on it and never pay taxes if they sell it on capital gains. So
there you go.
Absolutely. No, and they always say in real estate investing, you've got to make money when you buy. And you did
Mhm.
that brilliantly. And I just can't say enough that more people need to think like this because Kyle said, well, I have these assets and I don't have others, right? I'm in the military. And people think that's a negative. But for you, you made it a positive where you said, hey, I have VA eligibility. I want your house and I'll take that on. And they were just like so happy for you. They didn't care that you took over the loan. It took the seller one phone call. They called the bank and they gave Kyle permission to ask questions and apply for the loan. And we took it from there. And it was just such a interesting transaction, where you did well. The seller was happy. They got close to ask. I mean, we got some off, but it had been for sale for probably 5 or 6 months. They were about to make it a rental. You did them a favor taking it off of their hands, and they did you a huge favor handing you a loan at 3.1% with 28 years left on it. So,
Mhm.
is this the first VA loan assumption you've done, Kyle, or was it the second? I think it was your first.
This is my first personal assumption. Yes.
Yeah, I have a feeling you're going to buy a few more in this area before you're done because you just did so well with this purchase. And it's, we've been now we're still looking for great deals like that. Like that's just huge.
Yeah, yeah, it's been great. So
Yeah, you've killed it. Well, and the best part about this story is that you and I sat at the closing table in February and I was so excited for you. You just killed it. You got a great home for your family. All the numbers worked. And you said, I've learned a lot and I think I want to be an agent. And I was like, heck yeah. And now here you are on Zoom with Chandler and myself, and you are an agent on Team 912. You're working with me, and I'm so honored to have you. So this is kind of part three of Kyle's story, is that you're here, and I really feel strongly, I don't mean to speak for you, but I think you have a real big place in the world where you're going to change the lives of a lot of these military service people. And you've been talking about what you're doing, and you already have guys in your unit, interested in buying investment properties. So talk about that. Like when you're looking at the guys around you that really are getting the 19% car loans, you're here, you're now a licensed agent, you're active duty, so you're quite busy. But like, talk about kind of your vision for being an agent now, because I think you really have a lot to give to this community.
yeah, I mean, this is, like I said, I've got 4 years left until retirement. This is most likely my final assignment. By the time I'm eligible to PCS out of here, I'll have retirement in. And this is what I want to do when I get out. I want to help soldiers who are trying to get ahead financially by using their VA benefits and getting into investing. Some of these deals I did early on that really kickstarted me. Um, and I had great mentors, back at Fort Sill, and I just want to be that for the soldiers coming up. And yeah, so there's a lot of assumable VA loans out there. I think that's where the value is right now for these guys,
Mhm.
just because of the higher interest rates. Currently 6 and 7%. Uh, I would never pay those kind of rates. And you can get in at 2.5%, and it's just a matter of finding the houses that are eligible and fill in that gap, which we're working on in the background a little bit on the equity positions. But soldiers can get in the door and get going on their investing career like that. Buy a house, live in it for a year, and use a VA loan again. Especially younger guys without a bunch of kids, it's easy to move, and you can move every year and get another one and build it up pretty quick, honestly. So we've been scrubbing the MLS for these deals. I've got a spreadsheet I'm keeping now that I update daily. The initial work took a long time, um, going through thousands of listings to
Yeah.
find the VA loans that would meet the interest rate requirements. And now it's just, daily I go in and see what's changed to contingent, what's sold, and then the, new ones on the market when there's, 40 new properties hitting the market a day out in this, Chatham and Bryan County.
Mhm.
Just maintaining that list so that when someone does want to get in the door like that, it's ready for them.
That's huge, Kyle. You're ready to go. It took me, I know how much work that is because I was doing it for your family and I was like, I know, but it gets a little easier. But you are ready. Like if there's anyone out there listening with any kind of VA eligibility, you need to talk to Kyle. In fact, I'm going to put this out there. Kyle and I are going to breakfast with someone this week, and I'm very excited. And they have VA eligibility, and they're able to qualify for a larger, what they would, I think is called a jumbo VA loan. And this person has identified a property and it's for sale for over $4 million. But it's a residence. Okay. It's not a commercial place. It is a single family residence with 2 units, 2 ADUs. No, wait, I'm sorry, with two, it's like a triplex. A single family resident with 2 units and then 3 ADUs, which is still a residential purchase. And so, based on your education, we know that this person, as long as they can qualify for the loan, they can use their VA eligibility for $4.2 million. Talk about, if you're getting a brand new loan, one of the biggest benefits is that there's not a whole lot of cash. They can get in it with very low money down. Can you talk about that a little bit? Because that's a very big deal to a lot of our service members.
Yeah, and on the VA loans, zero down is all you need. That's not a bad deal right there.
No.
If you do put 5% down, you're going to reduce your funding fee by like 1%. So that could be beneficial as well. But no money in the door, you're not going to find that anywhere. Even FHA loans, you're looking at 3.5% down, and then you have to pay insurance on that, mortgage insurance, which yeah, I'm okay on that. VA loan beats that all day.
Okay, but when you say no money down, can they really buy a house with no money down, like zero cash at all? Surely there's,
Yes. No, I mean, if you're using your VA loan for a primary residence, any funding fee, all of it, you can roll into the loan.
okay.
So the thing I will caution people on that is that if you're buying a house for, let's just say, $100,000 and you're rolling your funding fee and closing costs into that loan, and you're looking at, $110,000 loan maybe on a house that's $100,000,
Yeah.
and you move 2 years later, um, you need to have ran your numbers ahead of time to ensure you have multiple exit strategies that I can rent this place out and it's going to cash flow, or I will be able to sell it if I need to. Um, so that's, something that can get some people is uh, they want to live in an area that the home values are higher that isn't going to rent as well. Um, so just something to be aware of if
Okay,
you're rolling those fees in.
I have a case study. I don't know the answer to this, so I want your opinion. So I just sold a house and we had it for sale for 220 and we just couldn't. It kept going under contract and falling out. It was in good shape, but it wasn't in amazing shape. It had stuff. And so people would do an inspection and oh no, the water heater is at 10 years old. So anyway, I ended up looking at it with our wonderful friend Kim George, the appraiser, and she said, Julie, it had been like 5 months for sale. And she said it's really worth about 200. That's why it's not selling at 220. So I got my guy to come down to 200. Boom, we get another offer. And we had a lot of VA offers, okay? And he was willing to do VA. The guy was a former veteran, and VA's tough as a seller because you have to do some repairs. But anyway, so the guy came in and he goes, everyone that offered with VA, they wanted cash back. They wanted to offer whatever, and then they wanted some seller credit. So I was assuming that they needed us to cover their cash. I assume they had no cash, but if if they truly can get it with no cash, that's interesting. But this guy that finally bought it, he offered 200 and he wanted 10,000 in seller credit. And my seller was like, I am not doing 190. I already brought it all the way down. So what we did was we responded back and we said, we'll sell it to you for 210 and then we'll give you 10,000 in seller credit. And they accepted that immediately, which I thought was interesting. So why would they always come at us with a VA loan and want so much cash back? I'm just very curious what your opinion is on that. I don't actually know, but you probably have a good educated guess on that.
Okay, so they were going to pay $10,000 more to get a $10,000 seller credit.
They were.
That's
That is how we
okay.
closed. It closed last week. Yes.
Yeah,
Actually,
I mean that's
okay.
to me like whether you pay 200 with no credit or 210 with a $10,000 credit kind of balances out right on the sheet. So I don't I'm not really sure. And as far as the zero down, I'll back that statement up because you do have to pay for things up, like you're going to pay for your inspection fees and things like that when you're getting in there. So you do have to have some money to pay for things like that. Yeah.
I definitely got the feeling that they didn't have a lot of cash, which is, it's okay. I'm in no way judging. I'm just curious, like I want to help veterans and I love being able to sell to a veteran. And you know what I mean? Like it was good, but I was just really curious what was going on the backside. And again, if we know what people need, it's a lot easier for us as agents to provide that product. So that's why I was
Yeah.
kind of curious about the requirements. So, okay.
Well,
Yeah. And then there could be, another piece is if your home doesn't appraise. So like we bought a house in Tennessee. Um, and if it doesn't appraise through the VA appraisal, you do have to have 25% of the difference in cash as well. So that's another reason you could need cash, but it's not the full amount. So you have to cover 25% of the gap on a VA loan.
another question I have a buddy that bought a house VA loan. Um, as soon as he rented, it was in Fort Benning, Georgia. He
Okay.
got it rented out and he had to move to North Carolina. And he was like, dude, my property taxes went up like 300% after I got it rented out. Is that something you've run across? He's like, since he's not living in it, they jacked up property taxes.
Yeah, so my first house I bought in Texas, um, I claimed homestead on it when I was living there, and it severely reduces the taxes. So I'm not familiar with homestead in Georgia so much,
Mm-hmm.
but it may be a similar situation to that where you're homestead in the house, and then when you move out, you can no longer claim that in Georgia, maybe. So that could be a reason. And then they do also, I get new valuations from taxing entities all the time. Hey, we're increasing your property taxes. And I've fought a few of those successfully. As in they'll send a notice and be like, hey, your property taxes are doubling this year. And
Mm-hmm.
I'll kind of go and look at some comparatives. I'll call my property manager and have them do, like a CMA, and I'll send it back to the taxing authority. And typically, if from my experience, if you're fighting it, they'll just kind of be like, whatever, we don't want to deal with you, and they will actually lower it. I've had successfully a few
Nice.
times done that because they're like, we're not going to deal with someone pushing back. Like, we just want to send you a notice, and we want you to give us more money, which is what 99% of people are going to do is just be like, dang, I
Totally.
guess I got to pay more.
Yeah.
I can take a stab at this if you don't mind. And I'm not a tax expert, but I do live in Georgia and I am an agent in Georgia and I deal with this. So Kyle and I both live in Bryan County. And in Bryan County, homestead means $300 a year. That's it. It's awful. So we don't actually have a great homestead exemption in Bryan County. Love you, Bryan County, but come on. Okay. I just want to say that loud and clear. But Chatham is actually very different. So it's in Georgia, it's very county by county. So I don't actually know the county where your friend was, Chandler, but um, these are things as a buyer you do want to know in advance. Okay. If your numbers are that tight, I really recommend knowing that in advance. Most people that I deal with, they're buying it as investment from the beginning. The other thing I want to point out too, which I think is very interesting, is the state of South Carolina. They have an interesting homestead exemption. Again, not an expert, but I've talked to multiple people. If you are um, living in the home, it's like 2%. And the second you move out, it's 6% of the value, like immediate, tripling of your property taxes in South Carolina. I've talked to so many people that invest in South Carolina that they lived in it and then they left. And so that does happen. So anyway, that's again part of the math, and everyone needs to do the math on that. If they're doing the live and rent out method, they need to be very aware of property taxes. A great point, Chandler. Absolutely great point. I hope that's helpful. That's about as much as I've got on the topic, but it's something.
Yeah, no, I think that's the reason I brought it up, just so people listening kind of like, hey, property taxes might go up after I move out,
Right.
because it definitely surprised him. He did not plan that.
That's why you buy a multifamily too, because you're going to get a significant savings in the taxes on that multifamily. So you can have 4 units for a way lower tax rate because you live in one. So, that's another reason, especially if you can use a VA loan on it. Like that's kind of a no-brainer.
Yeah, for
Yeah,
sure.
yeah, and we don't even claim the homestead here because we still claim homestead in Texas. That's
Oh,
still our
smart.
we still pay taxes in Texas, which is 0%. Just a benefit of being active duty. If you've been stationed there, you can switch that to your state of residence because I intend to move back to Texas someday. Yeah. Once I get out, I'll probably have to switch that to Georgia though and start paying them, what is it, 3% here of my
Yeah.
money.
Kind of brutal. But in Texas, though, I have to say this, you're very smart, but Texas has no income tax, but very, very high property taxes. Very. So if you have a rental in Texas and you can leave your homestead exemption, I would do the exact same thing, especially when you look at $300. Like you're coming out way ahead there.
Yeah, I think it's saving us about $1,200 a year on that house in property taxes. So it's not too bad. I'll take it.
Kyle, where can people contact you? How can they find you?
Yeah, so I work on Hunter, but I can in the description down below I can post my card. I'm on Team 912 with Julie here, licensed realtor and certified through the National Association of Realtors as a certified military relocation professional as well. I have a Facebook, but I don't typically use it. But Team 912 Facebook, YouTube. I'm not big on social media.
That's all right. Team
But
912, we actually have Kyle's bio on there. It's impressive if you get a chance to read it. And I just, hope the listener will keep you in their head to do the math. Okay. Kyle's really good at math. You don't have to be a math genius, but like do the math and real estate can really work for you. What you've done, Kyle, is just really exceptional. And I really believe you're going to change the world. I told you that day one. And I'm excited for you. Anyone that gets an opportunity to work with you is going to come out ahead for it. Like Kyle's not going to let you buy something unless it's going to make you money. He'll do the math for you if he's your agent. Okay. That's your plug. So if you don't want to do math, just use Kyle and he's paid typically by the seller. So he's kind of free to you. Like you can't beat having that brain power in your corner. So I just thank you for your service, Kyle, and for what you're about to do for our local, real estate investment community. And Kyle does come to the meetups whenever he can. So hopefully you'll be there next month. And we just really, if you're inspired by his story, if you have any VA eligibility, please reach out to Kyle anytime. Kyle, are you okay if maybe we put your email in the show notes as well?
yeah, that's fine. Email, phone number. Yeah,
Yeah,
it's all fine. I'm gonna drop my card in there anyway. So
awesome.
yeah.
Yes. Well, thank you so much for coming on.